Good morning, good morning, good morning. Welcome to today's morning blast. It's finally Friday, March the 14th. Before we get underway, I'll quickly get the legals out the way because Sod's Law forgets the one day we say something that really we shouldn't do. So as usual, nothing discussed on this Spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ Global Limited, trading as PIQ or PIQ Suite, or indeed that of the hosts, which, as you know by now, is Mr. Michael Brown and myself, Mr. Ryan Basie. Good morning and happy Friday to you, Mr. Brown.
Very good morning, Ryan. Good morning, everyone, and a very happy Friday, one and all. We've made it to the end of what's been another busy and chaotic and tumultuous trading week.
Oh, nice use of tumultuous. Just got to ask because it's been kind of a theme for this week. How is the aircon today? Have you got aircon?
No, I've got a window instead because I've taken the shocking liberty of working from home today.
Oh my days. This is end of the world stuff. Everyone, I hope everyone's tuning in and listening to this. This is a bad sign. Well, part-timer, all that stuff. I best you better crack on so you can go back to bed.
Well, it was either work from home or get in for 6:30 for the UK GDP data. So,
Oh, not
yeah,
exactly.
the desk at home called this morning, I'm afraid.
Yeah, I
Um,
bet.
So yeah, sorry to let everybody down on that front, but hopefully we can recover with a decent conversation for you all
Well,
this morning. In terms of yesterday, then it was very much a case of another day, another tariff from the U.S. administration. This time, President Trump turning his ire towards the European Union, who had imposed a 50% tariff on imports of American whiskey, and in retaliation to that, President Trump has now threatened a 200%, yes,
oh, wow.
200% tariff on all wines, champagne, and alcoholic products imported into the United States from the European Union. President Trump saying that this will be a boost to the American wine and champagne industry. I would not like to be the White House aide who has to tell Trump that there is no such thing as an American champagne industry. But as some listeners on this call will know, Mr. Rich Bernard, champagne is not exactly my specialist subject. In any
Yes,
case,
hang on. Yes, well remembered. Yes, just a bit of background on that, ladies and gentlemen. Michael Brown accompanied myself and Mr. Rich Bernard to the Cricket Lords, and there's one simple rule: you bring a bottle of champagne. But oh no, Mr. Michael Brown decided to bring a bottle of sparkling wine from M&S, and
from
yeah,
England, English
from
sparkling wine. It
England.
was very nice English sparkling wine, actually. Uh,
Brexit bubbles.
well, we might all be drinking that at this rate, the way Trump's going. Anyway, the specifics of this, to be honest with you, quite immaterial. The real sort of issue is that it just reiterates that US trade policy is chaotic, it is incoherent, it is very, very volatile and very, very uncertain. And it reinforces the idea that, of course, it is basically impossible for businesses to be planning in this sort of an environment. I had a number of people mentioned to me on Twitter yesterday that they are American alcohol importers, and this is basically killing their business in one stroke of a pen or one post of a Truth Social account. And of course, secondly, it's making it pretty much impossible for market participants to price risk. So it was no surprise that we saw haven demand once again yesterday, with the S&P 500 ending the day down by about 1.5%, the Nasdaq 100 down by about 2%. Incidentally, at the close yesterday, the S&P 500 had fallen more than 10% from the record high that we printed in the middle of February, which does, of course, mean that the market is now in a technical correction, for those who like those rather arbitrary definitions. In terms of market moves elsewhere, we saw treasuries rallying across the curve, with the two-year yield falling by about 4 basis points on the day, trading to a low of 3.95%, while we also saw 10-year yields falling by a similar magnitude, trading to lows around 4.26%, although both of those have paired those gains overnight. And haven demand also propelling gold to fresh record highs, and we're at a new record this morning. The yellow metal advancing by around 1.5% yesterday. The high of the day so far looks to be at 2,992, so we are within touching distance now of that $3,000 an ounce mark, which I will happily inform you, Ryan and I did rather accurately predict some weeks ago now. So it is nice to be right once in a while. The one move, though, that we did see yesterday that some people may be scratching their heads about a little bit is the fact that we did actually see the dollar gain some ground. The dollar index was up by about 0.25% yesterday, and in the very early part of the London session, we have traded north of the 104 mark. This seems to be, firstly, a function of massive underperformance in the euro. Understandably, it's obviously got a 60% weighting in the dollar index, but I think it's also a little bit of a case of the dollar having gone a little bit too far, too fast to the downside, and the market subsequently taking a little bit of a pause for breath. In terms of other fundamental catalysts over the last 24 hours or so, we did have some data out of the United States yesterday. PPI coming in marginally hotter than expected at 3.4% on an annual basis, although that was lower than the 3.5% that we saw in January. It is worth noting that the components of the PPI release that feed into the PCE inflation metric were a little bit on the hot side, and most estimates, I think, point to core PCE rising to 2.8% in February, which would be up from the 2.6% that we saw in January, which is something that may give the Fed a little bit of pause for thought. We also had the weekly jobless claims data out of the States yesterday. Initial claims at 220,000 in the week to the 8th of March, pretty much unchanged from where they were in the prior 7 days. Continuing claims, though, did fall to 1.87 million, down from the prior 1.897 million, although it is worth bearing in mind that neither of those prints pertains to the survey week for the March non-farm payrolls number. In terms of other bits and bobs on the political front, mentioned earlier in the week that Portugal, their government has collapsed. They are going to hold snap elections on the 18th of May. I mean, it goes without saying that this isn't going to be a market mover, but it's just another bit of political instability for participants to be mulling over. The other bit of political news is, and I announced this with dread, Mark Carney, the new Canadian Prime Minister, he plans to visit both France and the United Kingdom next week. So just as we thought we'd finally got shot of the unreliable boyfriend, he is making a return, which I'm sure will be greeted with glee among market participants in the City of London. Speaking of the City of London, we did have, just worth noting, the Bank of England's weekly short-term repo operation yesterday rose to £61.1 billion worth of borrowing. That is an all-time high in terms of the usage of that facility. The reason I want to mention this is because we've had the usual suspects out on the internet bemoaning this and saying that, you know, it's the worst thing in the world. It's all quite complicated, but effectively it's a part of how the BOE are changing how they conduct their open market operations and how they actually implement monetary policy. This is something that they expect to happen, and they expect usage of this facility to continue to rise. So I don't think that's too much cause for concern, but nonetheless, it is an easy headline for a few folk out there. Lastly, in terms of yesterday, we did have some news in the tech sector. Apple, they are planning to add a feature that live translates conversations to their AirPods, and that feature is apparently going to come as part of iOS 19. I'm not even sure I'm on iOS 18 yet, so clearly I'm a little bit behind the curve on that one.
I've got to say, this is one of those kind of features that I think genuinely could be really, really helpful. Yeah, because there's a lot of features that come out and you're like, oh, this is just
I might be able to understand you in that case.
I won't go. Yeah, let's not get carried away. It's only going to be the first version. So.
It's very true. But no, I think it genuinely, you know, I'm a big advocate of AirPods. I'm wearing a pair now, but you know, the fact that they're now a hearing aid and also they're now going to do this live translation thing, it's potentially some of the most innovative stuff Apple have done in decades, really.
Yeah,
and most useful. Yes, absolutely. And last but by no means least, just to cover off. Excuse me, before I choke to death, just to cover off the data that we had out of the UK this morning. January GDP, the economy contracting by 0.1% on a month-on-month basis as 2025 got underway. That was an unexpected contraction, and it's also considerably worse than the 0.4% growth that we saw in December. Of course, this makes the backdrop even more dour as we move towards Rachel Reeves' spring statement on the 26th of March. But, and I do sadly have to have a little bit of a rant here, the ONS have descended into shambles once more. We were also meant to be getting trade data out of the UK this morning, but the ONS announced at about 2 o'clock yesterday afternoon that they are in fact unable to release that data because they've identified some errors in it, and that data will now be released on the 28th of March instead. Of course, this is the latest in a long-running series of shambolic events at the ONS. We still, of course, don't have accurate labour market data, not only in terms of the unemployment rate, but there's also doubts that are being cast over the earnings figures. The ONS now can't tell us how the UK is trading with other nations, and I think we are getting very, very close to the point where UK economic data, even the data that is released, is losing any credibility that it may have previously had, because the ONS are simply unable to get their house in order. And I don't want to, pity politicians or central bankers, but how are you supposed to make fiscal or monetary
Yeah,
policy in an environment where you don't actually know whether the data you're looking at is correct? So while I'm sat here going, the economy contracted by 0.1% in January, in truth, we've got absolutely no idea what it did
yeah.
because this lot can't sort their act out.
I- I'm sorry, but I'm kind of almost saying that, I prefer China's data at this point. Because at least I know that's bullshit.
True. Very true. But that's it from me for now.
Awesome. Well, thank you very much, Mr. Mike Brown. So, just quickly before I rattle off some headlines, some choice headlines from Zach's very good, as always, overnight news roundup. Just a bit of an update on our Twitter feed today. It's a holiday in Nepal, another one. So I'm sure they make these up sometimes, but who am I to check? So that's why you'll see our Twitter account very light today. So hopefully all back to usual on Monday.
Is is Zach taking the day off as part of that public holiday? I mean, he doesn't
No,
normally
but
need
he's.
an excuse, does
I
he?
bet I'm pretty certain he's looking at new holiday destinations as we speak because he's definitely due. Our friend Nick Carney will like that one. So where are we? Right, some headlines from the overnight news roundup. Starting off with macro and policy news. China stimulus hopes. China shares rallied on speculation of an imminent PBOC triple R cut and hints at more consumption stimulus at Monday's policy meeting. That's according to the Wall Street Journal. A financial regulator urged banks to relax consumer credit quotas, pledging sustained backing for large sum lending. Sticking with China, Goldman Sachs sees an early pickup in construction activity aided by easing local government debt concerns. State oil companies reduced purchases of Russian crude this month, wary of compliance after fresh US sanctions on Moscow. In terms of US economic and political developments, Treasury Secretary Bezant voiced concerns about recursive Biden inflation, stressing vigilance on price levels. Vice President J.D. Vance said he can't rule out a recession. Secretary of State Rubio sees Mexican cooperation on drug trafficking better than ever, but still not enough. He did go on a bit of a rant yesterday about this. Canadian ministers ended high-level US tariff talks with no concrete breakthrough, but called discussions constructive. I think we saw a headline, if I recall correctly, from the Ottawa Senators, whatever they are over there. We saw some very kind of positive headlines, which I think gave stocks a bit of a jump at the time. 2 judges blocked the firing of thousands of probationary federal employees, reversing a Trump administration move. The Democrats cleared the path for a Republican funding bill averting a government shutdown. The Trump administration plans to invoke the Alien Enemies Act to expedite deportations. In terms of Japan now, Japan and its monetary outlook. Yen weakened after Rengo, Japan's largest labor union, confirmed a 5.46% wage increase below a 6.09% demanded wage increase.
It's that
Reuters
0.09% that did it.
It is exactly that. Don't mess with the Japanese and their love for the precise nature. A Reuters poll expects Japan's core inflation to slow in February on resumed energy subsidies. The rate hike bets remain. Then quickly on ECB's Lagarde warned a large-scale global trade war would hurt the US in particular, but might spur deeper EU integration. Good luck. UK and Europe, UK GDP, as Michael said, dropped 0.1%. Services rose for a third consecutive month, though, apparently, according to the ONS, but we don't know, quite frankly. Fund managers, Aberdeen, Alliance, etc., and City strategists are trimming positions in UK gilts, anticipating economic headwinds. French high-frequency trader urges Europe's regulator to close an alleged futures loophole at Eurex. From reading what Zach posted, the article on this from the FT, basically you send the exchange dodgy data, and it allowed you to bypass their kind of rate limiter. I think it was 30,000 orders you can send a second, and you could basically send millions if you sent it via a few kind of corruptions in the data you were sending. And for those that are not unaware, exchanges do this to kind of try and throttle the traffic going to the exchange. And if you get done for over quoting, it's quite serious fines and penalties. Markets and hedge funds now. Morgan Stanley data. Asian hedge funds fared better than US peers amid the March sell-off, boosted by China's relative outperformance. Some geopolitical headlines. Ukraine ceasefire doubts. Many analysts doubt Putin's support for a ceasefire deal as tensions persist over an EU push to deliver up to 20 to 40 billion with a B in military aid to Kyiv this year. G7 diplomats meet in Canada seeking unity over after rifts over Trump's trade and security stances. China, Russia, and Iran continue to calls to end illegal unilateral sanctions, focusing on lifting measures against Tehran. Now, finally, corporate and market news. Tesla will produce a lower cost Model Y in Shanghai to regain traction in China's price-sensitive market. They also clarify its Baidu partnership is purely map navigation, no direct ADAS collaboration. I'm not entirely sure
what on earth is that.
Maybe automated driving assist. I don't know. I'm kind of guessing on that one, but give me some credit. It's Friday morning. Real estate. Compass is close to acquiring Warren Buffett's real estate brokerage, reflecting consolidation amid weak home sales. Foxconn, their Q4 profits fell 13% amid softer consumer electronics demand, though AI servers remain a bright spot. Guides for Q1 to be better than its 5-year average without precise figures. TSMC and the currency concerns. Taiwan Central Bank has contacted TSMC about its $100 billion US investment, worried about the FX impacts from large capital outflows. DeepSeek, the Chinese AI pioneer, prioritized research over revenue, refusing large investments from tech giants and state-backed funds. That's according to the FT. May face hardware bottlenecks if NVIDIA withholds advanced AI chips, could seek partnerships to ensure supply. In auto names, BMW expects slightly higher sales but flat earnings, citing China headwinds and tariff-related costs. Daimler Truck to cut 1 billion euros from its Mercedes-Benz trucks unit in Europe after a weak Q4. That's according to the Wall Street Journal. And finally, for me, SoftBank and OpenAI reportedly buying a Sharp LCD plant. I'm assuming that's not just to make TVs, for 100 billion yen, and that's gone to the Nikkei. And that's it for me and for me on the week. But now back to Mr. Michael Brown.
Good stuff. Thank you, Ryan. In terms of... Oh, go on.
I just said
I'm
you are
still
very
here.
well. Yeah.
Oh, right. Oh, sorry. That was a little bit... I need the old translating AirPods. That's what I need.
Yeah, I need a coffee, to be fair.
Right. In terms of today, then, we do actually have a pretty light data docket ahead of us, to be completely honest with you. We've already dealt with, of course, the UK GDP figures that we had out this morning, and there are no major releases due throughout the remainder of the European session. In fact, the only notable release today comes from the United States, and that is at 2:00 this afternoon, where we get the preliminary read on consumer sentiment from the University of Michigan for the month of March. That index is expected to fall to 63 from a prior 64.7, and a print in line with that consensus would be a new low since November of 2024, and of course, by extension, the presidential election. It is worth bearing in mind, of course, that the UMich survey has been horrifically skewed by politics over the last couple of months. To give you an idea of that, in the inflation expectations component, last time around, Democrats were expecting year-ahead inflation at 5%, and Republicans were expecting year-ahead inflation at 0%. So I would question the degree of signal that we can discern from all of that noise, although I would say that the data is probably worth a little bit more focus than usual, given that if you think back to this time last month, it was actually the soft consumer sentiment data and rising inflation expectations that kind of kicked off all of the growth and stagflation worries that we are still dealing with 4 weeks down the line. Besides that, there is really not a lot else going on, to be completely honest with you. No notable corporate earnings due to report before the market open. We are due to hear from the ECB's Cipollone and the ECB's Escriva, but I think those remarks are likely to be ones for the purists. I would just caution, though, of course, that the usual reminder, there is the potential for weekend gapping risk, any Trump shenanigans on trade. Of course, we've also got the geopolitical negotiations going on in Russia as well. So that's something else worth keeping an eye on. And also just bear in mind that it is a very, very busy and big week ahead for the financial markets coming up next week. We have policy decisions due next week from the FOMC, the BOE, the BOJ, the SNB, and the Riksbank. And we also kick off next week, actually on Monday, with the February US retail sales numbers, which, given the context around jitters over the US economy, are likely to be very, very important indeed. So perhaps a little bit of sort of calm before the storm vibes as we move through today and into the weekend. And that is your lot from me this morning and for this week.
Magnificent as always, Mr. Michael Brown. Thank you very much, my dear friend. Listeners, thank you so much. Zach, thank you. Cam, thank you. Anyone else? Rich, thank you. Anyone else that's part of Team PIQ, thank you. It's been a very good week, a very busy week on our end. And by the looks of it, a busy Friday and a busy weekend for me. I've got lots of stuff to be ticking off my to-do list. Listeners, thank you as always for tuning in, especially our regular ones. If you are trading today, as Michael's alluded to, keep it tight because next week's going to be a big week. So basically, don't do your ass today. Have a nice weekend. Stay safe, and we will see you Monday. Goodbye.
We will indeed. Bye for now.